Welcome to the Dental Business Guide podcast. From money to marketing to management, this podcast will help you run a better dental business.
Okay, good evening, everybody, and welcome to this webinar. My name's Aaron, and tonight I've got the joy of talking about understanding your dental practice finances. So why am I talking about this? So let me set the scene firstly. I've been working with dental practices for over 20 years now, and I'm married a dentist meter. We've been running private clinics in London and Surrey for many years, and as well as helping many other dental practices all across the UK with their accounting, finance, tax, all that type of thing for many years. And lots of things, I've seen a lot in my career. And I think over the next, it's been a tough period for many practices over the last few months. And I don't think it's going to get any easier with the budget being announced in November. So now more than ever is the time to start thinking about how can I manage my finances better? How can I understand my business better? Because it's those types of practices that will do well and not just survive, but thrive if they understand their business better. Now, over the last 20 odd years, I've seen practices do pretty well without needing to understand their finances better because costs were low or interest rates were low and wasn't as much competition. But I think in the last few years, things have just got harder and harder for practice owners. And therefore, starting with understanding your finances is absolutely key. And today's session is only going to take 25 minutes, half an hour. It's a short session. I'm just going to highlight some of the key aspects of things you need to be doing and understanding and what you should be doing in place in your practice and understanding some of the key kind of financial statements you need to understand. Now, at Xero, as I said, we deal with literally hundreds of practices across the UK, all shapes and sizes. We deal with large groups, we deal with individual one-man bands, and of course, we also deal with associates. Now, we also deal with practices overseas and help some clients in Canada and now even in the US as well. Now, my kind of background, just to give you a bit of information if you don't know, I'm a chartered accountant. Trained with PwC many years ago, went into investment banking and then decided I wanted to have my own business and started off Xero. At the same time, my wife Smita, she started off her dental clinics called the Neem Tree, which is based in Surrey and in London. And over the years, we've had up to 5 clinics. Now she's sold a few, we're down to 2 clinics, all private, always have been private. And they're really a kind of a showcase of how we manage our practices, how we manage our accounting, how we manage our finances, how we manage everything in our practices. Now, we've also learned a lot in the process of doing it, because if what we learn in our practices, we can also share with our clients as well. And tonight is just a little bit of an insight for this. Now, this is the first webinar in a set of series up until, I think, mid to late November, which I'll be doing once a week. Sometimes it'll be me, sometimes it might be a colleague of mine, talking on different subjects around the financial, accounting, commercial aspects and the tax aspects, not necessarily any other aspects, just the financial aspects. That's our real speciality. And I think in these times, this is what people need to understand. So without further ado, let me kind of move on to my first slides. Let me see if I can get this working. Hopefully I can. So that's a bit too small. Let's make it bigger. So the 3 financial statements you can't ignore. So when every year you probably have to, if you're a practice owner, you'll need to get your set of accounts done. Now, historically, I've seen people leave it to the last minute, send their information in and get their accounts and pay their tax. That's it, or try and pay their tax. Sometimes they don't have the tax. But what we really need to getting into the thinking and the culture of is trying to get this done much earlier. And in fact, do this on a monthly basis. And I'll come on to that a little bit later. But those statements that you create at the year end can also be done monthly. Now, the 3 main statements are the profit and loss, the balance sheet, and the cash flow statement. Now, the P&L or the profit and loss ultimately just shows the income coming in less your expenses. So income could be the the fees generated by a practice or by your associates, sales of sundry items, and then any expenses, materials, labs, staff costs, marketing, anything really. Okay, so those are the costs, and that ultimately shows at the end the performance of a business, the profit or a loss in that respect. That's a simple one, the profit and loss. The second one is the balance sheet. Now, the balance sheet is ultimately a moment in time. It tells you at a moment in time what your assets are, but also what your liabilities are, and how much equity you have in the business. So in this respect, you might say usually a set of accounts might be done until the end of the 31st of March each year. So a balance sheet will be a snapshot of that date showing what your assets are worth, but also who you owe, whether it's the tax man, whether it's kind of trade creditors, whether it's suppliers, whether it's anything else, and also, of course, any loans that you may have taken. So that's a really important thing. It's a snapshot at a particular moment in time. If you did a balance sheet on the 31st of April, that'll be different to the balance sheet on the 31st of March, will be different to a balance sheet on the 1st of April, because what's happened, there's been some trading in that day, and that trading will be reflected in the profit and loss, and then that movement in the trading would then be reflected in the balance sheet. Now, you don't need to understand the technical details of that, but I'm just trying to highlight these are the two main kind of financial statements. And then what we have is the cash flow statement. And cash flow statement is ultimately just showing the movement of cash in and out of your business. And in an environment where we're going into now, I think, again, things aren't going to be easy. You need to have a clear picture of what cash is coming into your business, but also what cash is going out of your business. And it's cash that ultimately, or a lack of cash, that ultimately can force a business into real trouble. Because you might be, so for example, you might be doing some dental treatments, and you're charging or you're invoicing the client, but your clients haven't paid you. So you've invoiced it, so the sales would be reflected in the profit and loss account. But since you haven't got the cash isn't coming into the business. So you've got no actual cash coming in, yet you've still got to pay cash out for labs, for staff, for everything. So it's important that you then have a real grasp of what your cash coming in and cash coming out, because when you have no cash coming, if your position is negative, that's when you start feeling, oh my God, I need to sell something, or I need to get some short-term finance, or I need to get an overdraft, that type of thing. So if you can predict your cash flow over a 12-month period, or the next 12 months ahead of you, that would help you manage your business much, much better, and also help you kind of be in a much better position, because it's not a loss-making business that will close your business down. Eventually, a loss-making business probably would, but it's a lack of cash in your business that would ultimately close your business down. So it's so important to be on top of that. And the cash flow statement is something that we always recommend clients to prepare, perhaps each year, and update it as they're going, and keep an eye on where the cash is going in and out of the business. So you can see here, this is just another kind of another way to show it, really, in very simple terms. The P&L shows the revenues, expenses, net income for the period, the balance sheet, the assets, liabilities, and your equity in the business. And the cash flow tracks cash flow from investing and financing. So let's say, for instance, again, going back to the cash flow, which is ultimately the most important one in this, in running a business on a day-to-day basis, is that you have the cash flow statement. You see the money coming into the bank, but you also see the money going out to the bank. And ultimately, you want that cash flow to be positive, because if it's cash flow positive, that means something is positive is happening, and you're not having to struggle to pay for any liabilities or any bills or any tax bills, that type of thing. So, and in an ideal world, the profit and loss account would probably look like a cash flow statement, because ideally, when you do your work, you get the cash in, and when you do the pay the expenses, you go the cash out. So it might happen in the same month, but we know we don't live in an ideal world. But cash flow is the key to this whole thingy. So if you need help, reach out to me. If you need a cash flow, or need to understand how can you plan your cash flow for your business, because that's really critical. So that's a very basic understanding of the three most financial statements. So if you get these financial statements at each year, you'll typically, when you get your accounts done, you'll get a profit and loss and a balance sheet. You won't get a cash flow statement. That is something that would have to be prepared separately, usually by an accountant. But the P&L and balance sheet are your statutory accounts that would have to be filed with Companies House, or if you're a sole trader, to do your tax returns as well. Now, why am I talking all about this? Okay, so, well, if you're running a practice, ultimately you're hoping to build value in your business, and you're hoping to grow the business. And ultimately, say you buy a practice for £500,000, you might want to sell it for £1 million in over a period of time. But what is that? But how are practices valued these days? Well, practices are typically valued based on using a number called EBITDA. Now, EBITDA is a number that can come from the profit and loss account. And what that means is, it says there, it's earnings before interest, tax, depreciation, and amortization. So what you can see, if you see a profit and loss account, I haven't got an example to show you here tonight because it's only a brief webinar, you'll see your net profit. But what you have to do then is add back things like interest, you add back taxes, you add back depreciation and amortization, and you get then a kind of true picture of what the operating profit of the business ultimately is. So typically the EBITDA will be higher than the net profit because you're adding back depreciation, adding back amortization, adding back tax and interest. Now, that is a metric that is universally used now across the dental market, where people are working out the EBITDA. But the EBITDA is just a number, okay? And that's a number that can be derived from looking at a set of accounts. But then it's ultimately multiplied by a multiple. Now, that multiple can vary, but that multiple will determine ultimately the value of your practice. So in this example here, you can see I've said the multiple for a particular practice is 5 times EBITDA. So 5 times 300 is 1.5 million. So that would be the value of a business. Now, if we look at the current UK market, the typical range for any dental practices which are owner operated, so let's say you're the principal dentist working in that practice and you're doing the majority of the work, you're typically going to be valued between 2 and 5 times EBITDA. Now, the EBITDA will be quite high typically in those typical types of practice, usually because you're not having to pay associates and you're keeping a lot of the cash in the business or profit in the business. However, if you run an associate operated model, the range may be 6 to 9.5 times with dental associates running the business. So the EBITDA might be lower, but the multiple would be higher. Now, you may be thinking, well, why? Why would that value be higher? Why that multiple would be higher? Potentially because I could come along and buy a business from you. You might own the practice, and I'll pay you a higher amount. I don't have to actually physically work in the practice, but I'm going to be still getting a good income coming from it, and I'm going to pay you a higher multiple for it. That's what happens. So that's what you have to start thinking about is, firstly, if you are running a practice, do you continue doing your dentistry and run it you as a main operator in the practice, or do you potentially run the practice as an associate led, or is it a combination of the two? So I've written some ranges down of the multiple, and each multiple will be determined by the quality of the practice. Is it private? Is it NHS? Where is it located? The size of the practice, a whole variety of things. Now, why is this important? Because ultimately, this will determine what you can ultimately build your practice for, build your practice value to. Now, remember, EBITDA is ultimately built from profitability. It's a profit number. So the key, let's say you buy a practice for £200,000, you want to be able to, say, increase the EBITDA to 300. So there'll be many things you'll have to perhaps do, maybe cut some costs, increase your prices, a range of things that will ultimately determine whether your profitability is going to rise or EBITDA is going to rise, and ultimately your practice value will rise. So it's important to really understand your accounts and build your knowledge of the accounts in order for you to actually work out your EBITDA. And that's the key number. If you're going to track, one of the key things you want to track will be your EBITDA on a regular basis. And that's something that we do for many of our clients, is track their EBITDA, because then we can determine, how much is my practice approximately worth? So let me carry on. Now, why are we doing this? Why do we need to know the numbers? Honestly, I've worked with so many practices over the years, and some get it and many don't get it. Okay. And the key thing here is, if you have your numbers to hand, you see your numbers, you'll have real clarity of what your business is doing. And also be honest to yourself to say, well, Is it doing well or is it not doing well? And if not, you can then ultimately make better decisions. So if you know your numbers, you'll be able to delegate things much more better to your team members. Avoid micromanaging, as I've written there as an example. So really knowing your numbers is really important. I cannot stress how important that is. It'll make, as I said, if you're making proactive decisions, you'll be able to make better decisions through the data, and then ultimately determine, okay, we've done well this year. We can afford then to invest in some new equipment or do some redecorating or add another surgery, whatever it may be. It'll help reduce the anxiety, and ultimately it'll help you plan your business much better. So having the numbers, having the data is honestly the key thing in this whole process. Yet so many practices I know fail to get those numbers right because they don't necessarily have a process in place to actually implement the systems in place to actually understand the business, okay? Because if you have the numbers, you'll understand your business better. And if you understand your business, ultimately, you'll make better decisions. So what are the things you need to do to help you grow your practice from a financial perspective? So in my mind, proactive financial management is the key to unlocking your practice's full potential. Most people focus on their trying to work harder, do more dentistry. Yes, you've got to do that, okay? But sometimes it's taking a step back and making a real strategic decision to understand the numbers and understand the business can make a massive difference. So a great example would be we work with clients where we sometimes see their pricing. They're working so hard doing their services, providing their dentistry, working very hard each day. But if they took a step back, they could look at and understood their numbers better. They could say, well, if I increase my pricings of certain items more by, let's say, 5% or 10%, suddenly I'll have a lot more income coming in whilst I don't have to work as hard, as an example. So it's important to understand your numbers in the first place. So first job I would, if you're not already, is each day just in the culture of the business is get a look at the daily transactions each day. Verify all your patient transactions and deposits against any practice management software for accuracy. So I know if you use Dentally or Software of Excellence, that can happen automatically. That happens in a kind of cashing up. Then at the end of the month, each month, you need to get that P&L done. Okay, you need to have the profit and loss done. You can get a balance sheet done, and you can also prepare some forward-looking cash flow statements to actually spot the trends. Now, the way we do that with our clients is we do lots of automation. We ask clients to scan their information in. It comes to us. Our team does the bookkeeping using Xero. Xero then we're using Xero. We bookkeep it. We can then provide the accounts to our clients by the end of within a few days of the end of the month. So then they can have a team meeting and then start making decisions. And we provide that data to them to make the better decisions. So the key here is having a system in place. And if you don't have a system in place, we can certainly help you do that. Now, once you have that system in place and you've got a monthly report, you've got a monthly analysis coming in, it's important you sit down and have a look at it, maybe with your partner, maybe with your team, and to really start looking, okay, what is working, what isn't working? Where do we change things? Where can we cut our costs? Where can we increase our prices? What kind of treatments should we be doing? And you may even put a budget together to say next month or the next quarter, we're going to be putting a budget of X for materials or Y for marketing. And you can then allocate money towards that and not go above it. So this is what budget and forecasting ultimately is. And the last thing here is sometimes one of the key things that I've seen in some clinics are very good at it. So now what my wife's clinics, our accounts receivable is virtually zero. So what that means is we get all the money up front from our patients in advance of any treatment. So before we even started the work, we've got cash in the bank. So we then don't have to chase up clients for money. But I know many practices still kind of bill the clients afterwards, or the patient walks out the door, they forget to pay or don't pay. And therefore, then there's a real hassle collecting the cash coming in. So again, these are things that you can change. Because if you have the cash coming in or cash coming beforehand, before you start the treatment, your cash flow statements, as I said, the cash flow statement will be much more positive because you have the cash in the bank already. So you won't have that problem of, oh my goodness, I need to get short-term financing, or I need to get a quick loan, or I need to borrow money from my parents, or whoever it may be. So it's so important you start thinking in this mind. It's a mindset thing. Think about, look at the numbers on a daily basis. Is that cash being generated? Is that right? Okay, is it sufficient? Then you do the monthly P&L, because once you get the monthly P&L, you can then start doing other more fancy kind of analysis. And we're not going to go into that today, but you can do more fancy analysis looking at the hourly rates of dentists, or the percentage of lab costs as material, as a percentage of turnover. And these are trends that we would always look at to say, okay, that's working, that's not working, and that then helps you make better decisions. So let me move on. So I've mentioned this already, but I will kind of go into a bit more detail. So key tools for your practice, you want to be doing monthly bookkeeping. And we as a firm are a Xero Gold partner, and we help practices implement Xero. We help do all the bookkeeping. So information comes in from the clients, they scan it in, it comes into a product called HubDoc, which is a Xero product. HubDoc, we then process everything from HubDoc into Xero. In Xero, we do the books, do all the accounting, do all the workings. We do the associate pay if required, or the payroll. Everything's done. And then from that information, that prepares a management pack, or a set of management accounts. And that management pack is then sent to the client for them to review, make some decisions, and then ultimately hopefully improve the performance of the business. Whilst we're doing that, we can also do a monthly EBITDA assessment to say, okay, this is what the EBITDA of the practice is. And we'll look back at the last 12 months. And that's what any serious investor, if you're trying to sell to a corporate, for instance, they're not going to look at accounts of a year and a half ago. They'll look at accounts of the last 12 months. So if you can always be tracking your last 12 months EBITDA, they'll then look at that, or you can look at that and say, oh, my EBITDA is growing up moving forward EBITDA is going up a little bit each month. So then you might get to a point where you think your EBITDA is really healthy and doing positively, and it perhaps might not grow so much more. That's when the opportunity is to say, well, I think it's doing really well. I may want to sell it at that point if that's the thing for you. In addition, we would then look at other key performance indicators, as I mentioned, like lab costs as material costs as a percentage of turnover. We'd also look at non-financial metrics that perhaps come from dentally, like number of new patients or hourly rates. These are things that can be worked out, but you cannot work these things out if you haven't got the data in the first place. So it's so important to have all that data sitting in Xero, and it's done correctly and it's done accurately. I've seen many times where people are using a bookkeeping package such as Xero or Free Agent or whatever it may be, or QuickBooks. And honestly, if it's garbage in, it's going to be garbage out. So it has to be done properly. And cutting corners on this is the last thing you should be doing if you want to go into a business that you're trying to grow and develop. We know, and I know, running a dental clinic is an expensive business. It needs a lot of capital. It needs a lot of labor. So therefore, you need to have a grip of those figures. And by cutting corners or putting rubbish numbers in, you're going to get rubbish numbers out. And that won't really help you grow your business at all. So team meetings. So once you've done all this and you're getting all this information, and let's say you work with us to do that, you'll have team meetings to discuss performance and areas to improve. And that's the key thing, areas to improve. And you can talk to our team here, they can advise, or you might talk amongst your own team, and and pretty clearly, you will start seeing the trends, whether it's a positive trend or a negative trend. You'll start seeing those trends, and people will then start thinking, okay, you might think, well, I need to do something about this, or, oh, we're doing quite well here. But that helps you. The phrase I love to use is the numbers always tell the story, always tell the story. So these are just some testimonials from some of our clients, but I'll highlight the second one. This is Dr. Lee, a client of ours. By doing this, by watching the numbers and focusing on the EBITDA, this example was that our client improved their margin, improved their EBITDA by about 30%. Okay, well, increased the practice value by 30%. Sorry, because ultimately they're improving the EBITDA, so EBITDA is going up, and then ultimately you apply a multiple to it. So the value of the practice over 2 years went up by about 30%, which is a lot of money. And we know how expensive dental practices are these days. The values are high. So 30%, say, on a £1 million practice would go to 1.3 million, a lot of money, another £300,000 in that example. So it's so important when clinics and practices focus on the numbers. you start seeing a massive shift in the performance, and ultimately you get higher margins. Higher margins ultimately lead to higher valuations for the practice. So this is the real impact, is that focusing on the EBITDA, focusing on the P&L, or focusing on the P&L, which leads to the EBITDA, will then help you focus on where you cut costs, where you increase prices, and ultimately how you can run a business better and ultimately sell it in some point in the future, if and when you're ready to sell, if you need to. If you want to sell, you may not want to, but it doesn't matter. You can still maximize profitability whilst you're doing it. Now, I've kind of highlighted these already, but I will kind of talk these through. There are key pitfalls to avoid. Don't do this. Don't put your head in the sand. I've seen too many practice owners who may be struggling, and then they put their head in the sand and they kind of just focus on the work, and they get worse and they get into a real kind of negative spiral. And sadly, I've seen practices go out of business, and people kind of their relationships with their partners go down the toilet because they haven't really focused on understanding the business and understanding the numbers. And that is really key to the whole thing. If you understand the numbers, you'll make better decisions, you'll run a better business, your team will be happier, you will be happier, and ultimately everything will be happier, and you'll be able to take more money out of the business. Now, what I've seen again is that sometimes the practices aren't doing too badly. They might be doing quite well, but many practices ultimately struggle is because many of the owners take too much money out of their practice, mainly to support a lifestyle perhaps they can't afford. They have the big houses, the big cars, the big holidays. Yes, you can have all that, but only if the business is actually generating that money. And there's no point taking another loan out and another loan out and another loan out just to finance that lifestyle. Eventually it catches up with you. So you need to really be very careful. And I've seen it with many dentists, particularly younger dentists, where they get caught up in the emotion of, oh, we need to have that bigger car or bigger house or whatever. Ignore the rubbish, okay? Don't worry about your friends or peers are doing. Just focus on your numbers. So it's key to have that weak, to know your numbers and not have a weak system. So really, if you haven't got a good financial system in place or process in place, so you know the numbers accurately and on time, then you need to kind of give me a shout or my team a shout. In addition, another pitfall to avoid is labor costs. It's very easy to hire another team member to think, okay, that will solve the problem. But quite often or not, that just adds more labor, more costs, and ultimately squeezes your margins. So you've got to be thinking about who you're hiring, what's their capability, what can they do, how can they add value to the business. If you're hiring people just to kind of fill in gaps, I've seen it before, and I've seen it even in my wife's clinics many years ago, which is hiring people to fill a gap, but that person was very average and it's cost us more money than anything. You've got to absolutely change that and do that. And then also, I know many people just focus on production. They look at the turnover or the money coming into the bank account or into the cash into the bank account and the number that comes the daily kind of collections at the end of the day. But they don't really focus on the other KPIs, the financials, as I said, the turnover, the profitability, the other KPIs such as lab costs and material costs and staff costs as a percentage of turnover. And then they don't even look at things like non-financial data, like marketing numbers, like new patients per month or where those patients are coming from. So you definitely need to set up systems in place, not just to track your financial, but the non-financial bits as well. And then at the same time, many people just use a very kind of generic advice from an accountant or so their dad or uncle who's an accountant who might be an accountant, but they have no idea about dental stuff. And that's failing. You're failing yourself more than you're failing your business, and ultimately you're failing your team. So it's so important to get proper advice from people who know it. Now, I don't want to blow my own trumpet, but we've been doing this 20 odd years. We run our own practices. We see what works. We also see what doesn't work. There are many other accountants out there, but none, as far as I'm aware, who actually run dental practices. So we have a really unique insight, particularly in the private domain. That's where our kind of real strength is, in private clinics. We see what works, what doesn't work, and then we can share that knowledge to people or to clients with that kind of specific understanding of the sector. So what can you do today? Okay, there's a few things you can do. You firstly can take control today. The first thing is start your monthly review, start getting your financials done, start getting a system in place. understand your financial statements. If you've got some accounts already, have a look at them, interpret them, ask questions. If you're not sure, reach out to me or my team. We'll happily help you interpret your numbers. Number 2, get a set of advisors, someone who understands dentistry, who knows what they're doing. Again, we can do that. And then thirdly, make better decisions from this information. Financial literacy of your business is ultimately the foundation of your career and your career freedom. Too many practice owners, I think, get excited. They buy a practice or they set up a practice, get very excited, but they lack the financial understanding. And by lacking that financial understanding, they struggle, and that's when they kind of have real problems. Okay. And then cash flow issues and tax issues, and it's just an never-ending cycle of going round and round, and the same problems every year. So it's so important to really shake it up and do something different. And again, we can help in that respect. So we have a whole bunch of resources. Okay, what I'll do, I will share some links now. So I'm going to go to our website. There's a few resources that you can take and get here, and they're all totally free. Okay, well, most of them are free. We have our learning center. So if I go to our website, let me go to our website. Just bear with me a second. So I've just sent a link to our learning center. On our learning center is a whole load of information on finance, accounting, marketing, all those types of things. Okay, and I can share that. I will also share another link. We've got also you've probably joined this event through our webinar program. So we've got, as we said, I've got a webinar next week. Okay, I'll be putting a link. This is a link to an event we're doing in February. Okay, and there's a whole load of it's a one-day event at the Institute of Chartered Accountants in England, Wales. Now, obviously, I'm a fellow of that, and we've got a nice space there. We'll be talking about accounting, tax for dental practices, or dental practice owners specifically. So it's a whole information there. Have a look at that event. Okay. And the other thing I want to highlight is our packages that we can provide to you. Where's it gone? So here, I've sent a link to our dental practice packages. Okay, and these are the packages we do for all our practice owners. Now, let me just see if I can share my screen. Bear with me a second. I just need to figure out how I do this, but if I can't do it, that's not it. Okay, well, I can't do that today, I don't think. But what I can do is I can share my screen. So hopefully you can see my screen. Yep. Now this is the packages for dental practice owners. As you can see, we have a basic package, a kickstart package, it's called, a grow package, and an expand package. And as you can see, these are the things that we typically do. Under operational accountancy, we have bookkeeping, quarterly accounts, balance sheet, bookkeeping, tracking categories. We get the annual accounts all done, corporation tax, director's return, personal. We do basic tax planning. You have a dedicated accountant. You get part of our buying group. Now, our buying group is something that allows people to get savings. We have discounts with various suppliers, from people like Wrights to some other kind of suppliers as well. We get good discounts because we've negotiated. We have over 150 practices on the buying group, so we can save you money if you haven't already. Join the buying group. That's free anyway. You don't even have to be an accountancy client. You can join it for us for free. But if you look at the more advanced packages, we help set up the chart of accounts in Xero. Basically, we do everything, okay? And if you're a group here, we can do it for multiple practices and consolidate all the information and do all the company secretarial work. So we can pretty much cover everything there. So we've got enough experience, and then we can provide FD services. And these are some of the kind of other KPIs we can look at. Chair time, revenue analysis, treatment mix, pricing, do a valuation, cash flow analysis, all of these things we can do. So we've got a lot of experience in this. And this is kind of what we've done bread and butter for the last 15, 20 years, all developed in our own practices. And now we can provide them to other clients. And just going back to this February event as well that we've got, this one here, February the 6th, it's the ICAEW. And again, this has got a whole range of things. What we're going to cover. It's a full day. It's only £300, but it gives you a good understanding of this. So you can check this out. And if you want to book a ticket, there's very limited spaces. I'm keeping it to about 12 people. So if you want a space, please book early. And I imagine this will get quite busy. And then finally, just to kind of highlight, I know you've booked on this event. Hope you found this of interest. Okay, tonight's was this one here. Next week, we're going to be looking at tax and looking at some tax efficient strategies. If that's of interest to you or any colleagues you know, please do share that with others. And we've got a whole load next. And the following week is practice growth. We're looking at how to acquire practices. Number 4, are there some of the systems we put into place with Xero and other processes. And we'll look at even at AI. We look at pricing of services, funding, getting loans, getting finance on the best terms, building the right finance team, who you need, what types of people if you're going to build a proper business, AI again. So we've got a whole range of things that are there. If I go back to my thingy now, hopefully I'll stop sharing this. I'll go back to my tab. So, no, sorry, maybe you didn't see the slides. I'll show the packages again. Hold on, I've just been told. Sorry about that. How annoying. I'm not sure why it's not showing. It's telling me it's showing, but okay, not to worry. If not, I've sent the links in the here. Hopefully you can see that. Can you see that? Maybe not. But if not, these, yeah, okay, that's it. Okay, right. I think you can see the packages now. You can see the dental practice startup. You can see the grow packages. You can see literally everything that we've got there. These are all these are expand services for growth. I'll just scroll down. I'll just scroll down a bit more on this page. Go back. Client care, tax planning. We basically cover everything, and it depends on the size of practice. The prices will be determined based on which practice size, what you need, etc. But it shows you how much detail that is there. And one of the things that I really do want to show is that there are so many things that can be monitored, and you can see here we can do chair time, revenue, treatment mix, pricing, practice valuation, cash flow, profit per clinician, which is always popular. Basically, we've seen quite often where some associates are making money, which associates are losing money in a practice, these types of things. And what we've also seen, and what we're working on a product with AI to basically bring in data from Xero, bring in data from Dentally, and then hopefully analyze that and help practice owners make better decisions as well. So that's kind of touched on it tonight. I welcome any questions if anyone has any questions tonight. I appreciate I've gone a bit longer than I anticipated, but if you've got any questions, please do reach out, or you can ask me a question here. Alternatively, reach out to me. I can put my email addresses here, arun@samara.co.uk. You can book a call with me, or you can book a call with my colleague Natasha, who kind of heads up our accounting side of things. She'll be happy to help out as well. But I hope this has given you a real basic insight. I've tried to dispense 20 odd years of experience into like 30 minutes or 40 minutes tonight, okay? Just to give you a taste of it. I don't want to overwhelm you, but you know where we are. And if we can help in any tool, please let me know. This video will be recorded. This video has been recorded, Ron. It has been recorded. It will be sitting on our website in due course, and our YouTube, or my YouTube channel as well, very shortly as well. So hopefully this has been useful. And if you have any questions, don't hesitate to reach out. Thank you. I'll just wait around for a moment if anyone has any questions. If not, no big deal. Appreciate it's a Tuesday night. You might have more interesting things to do. Okay, thank you very much.
Thanks for listening in to the Dental Business Guide podcast. We welcome your feedback, and if you're enjoying it, please let your friends know too. Until the next time on the Dental Business Guide podcast.